Geopolitics is once again reshaping global trade, and the ripple effects are hitting grains and oilseeds hard. Trump's back in the headlines with talk of a weaker dollar and new tariffs. Tensions are quietly building in the Black Sea, and weather's throwing curveballs across the Americas and Europe. I'm Johanna Bota, and here to break it all down is StoneX's VP of Clearing and Execution Sales, Bertrand Oesterle. Welcome, Bertrand. Nice to have you back again. I want to start with a quick update on grains and oilseeds and how it's reacting to the latest developments.
Morning. So the developments have been interesting, especially in terms of weak dollar policy. So it's been since the 2nd of April that Trump has been hammering down the fact that he wants the trade deficit to reduce, and there's two ways of going about it. So the first one is to make sure that the dollar is weak, therefore you export but you make imports less attractive. And also the other bit is to try to get interest rates down, but that's for two reasons. For one, for refinancing, and if interest rates are lower, then you attract less financier people to come into the dollar, therefore going away from the dollar. And Trump has been saying this week that he wants a 1% interest rate. So he's been challenging Powell once again. He's been saying that he wants to replace the chair, and it puts the Fed into question for the future. Is it going to be a viable body or not? So when we combine those two elements of lower interest rates, demand from Trump, and also the impact on the dollar, this comes to affect us straight away, and it continues to affect us in grains and oilseeds, and especially on the European side. So when we look at the past few months, on the 2nd of April, the euro dollar for December was 109.50. When we look yesterday, we made a high of 119.51. That's a 10% hike. So when Trump is talking of a 10% tax on Europe, we already see it through the Euro FX. So the Euro FX has had a massive impact on prices, especially in Paris wheat. We've continued to make new lows, and the new low yesterday was 192.75. So again, we're being hammered down on the Euro FX, and EU farmers are just in disbelief. In a way, we should have known, and we should have known better. Our US colleagues had been telling us a few months ago that the target was 120. When we look at the Euro FX spot market, it's just below 118, so there could be another element of pain for us to digest. And if we translate that into December, it could be all the way to 121. And we've been mostly looking at the December contract simply because we've looked mostly at December Paris wheat against December Chicago wheat for the arbitrage. So to sum it up very easily, Euro-dollar is hurting EU farmers.
Now, I want to bring it back to the tariffs that I mentioned earlier, because we know that so far the only deal that we know of is concrete and signed is the one with the UK. What is happening? Because the July 9th deadline is approaching soon. So what's going on with India, Japan, and China?
So we're being told by Trump that there's a deal with China, that there's an upcoming deal with India, and there's no deal with Japan. Okay. But as you rightly say, the deadline is the 9th of July, and it's approaching fast, and Trump is saying every country is going to get a letter. So when we look at the euro dollar, some people have thought that if we get to trade deals, then all the bearishness that we've seen while the tariff tantrums were going on, if we get to deals, then it should be bullish because it should be a reversal. Because we still have that pending sword of more tariff tantrums from the 9th, it may not take place.
Okay, let's move on then. Now that the dust is settling in the Middle East, we can turn our attention back to Russia and Ukraine. So what is the latest in the Black Sea region?
So the interesting bit over the past 2 weeks with the 11-day war between Israel and Iran is that Ukraine-Russia has been completely put into the shadow. Again, from a trade point of view, it doesn't change much the logistic because it's been an ongoing story for over 3 years, and therefore people have been accustomed to getting versatile about how to adapt. But the war is still raging. There's still no improvement. One bit which is interesting from the Black Sea region over the past week has been an announcement from Turkey, and it's been mostly unnoticed, and I'm still waiting to see how the trade is going to react. Turkey announced that from the 1st of July, so from yesterday, the right of passage through the Straits of Dardanelles and Bosphorus would go up by 15%, so we're going to have to watch that out. And the last bit from the Black Sea is we've had some sort of a deal between the EU and the Ukraine. We've read through the entire paperwork. It's quite messy. There's quite a lot in there. It seems to be a bit more reciprocal. In the past, EU farmers were complaining that it was all about Ukraine exporting to Europe. And this new deal is a bit more reciprocal, where there's some Ukraine to Europe, but also some Europe to Ukraine.
Okay. I want to go back to the weaker dollar, because you think, like you said, it would support U.S. exports and boost Chicago prices, but actually corn has hit new lows. Why is that happening? What's going on?
Well, you're right to mention it. I think it's an interesting element to put to the forefront. So yes, a weaker dollar should mean US exports, and we've seen the US corn exports continue on their strong pace. So it's 6% ahead of what the USDA overall figure for the year is. But as you rightly say, the corn contract has continued to make new lows, and September yesterday made a low of 400.25. So here we need to look at not just the euro-dollar movement or the export pace, but we need to look at other fundamentals. And when we look at the WASD report or USDA report that came out on the 30th of June about planting, it was quite uneventful. We were expecting a slightly higher area. It came in as a slightly lower area, but some 150,000 acres in corn and soybeans, so it was more or less ignored. And so we went back to the current conditions. The current crop conditions in the US are pretty satisfactory. The US crop in corn is 73% good to excellent. It has regained 3%. It's up 10% compared to the 5-year average of 63%. And similarly in soybean, it's 66% good to excellent compared to 62, the 5-year average. So we've had weather in the US that has been benign, and it's been a kind of flip between rain, heat, and the cycle has not been negative so far. Right. So that's the US element, and beyond that we've had some news from South America as well, which have been pressurizing the market even further. So for corn in Brazil, we've had StoneX, our analyst in Brazil, saying that they see a 136.1 million ton crop. It's big. Datagro is 134. We've got AgroRoll at 130.8. It's big figures coming out of Brazil because the second corn crop, the safrinha crop, is yielding well. And we also had a little bit of element from South America out of Argentina, but more on the oilseed side, and that's more a technical element. We had the export tax, which would go back to what it used to be from the 1st of July. So that means that the soybean export tax has gone from 24.5 to, from 26 to 33%. The soybean meal, soybean oil have gone from 24.5 to 31. So prior to the rise in export tax again, the Argentine have basically rushed into exporting as much as they could before the tax went back to a higher level. So the June exports were some 6.1 million tons of soybean and soybean products, and even China looked at it and bought some soybean meal from Argentina, some 30,000 tons. We hadn't seen such a deal since 2019.
Okay, and what about rapeseed?
So rapeseed's been interesting on the back of it, because we've got good conditions in the US, and because we've got all that export out of Argentina that took place. Some of the specs started to think, are we right to remain long in rapeseed? And we've seen yesterday the rapeseed August being completely hammered, and when we look at the open interest, it has dropped significantly in August alone. We've seen cooperatives buying back the spreads. The August NOV or the August Feb have gone down quite significantly, and it shows that the trade has bought back as the market came off, and it's the August has been hit. So our estimate is that the specs have reduced their long.
Okay. I know I ask this every week and I sound like a broken record, but most of what we talk about is still anchoring the market. So what could actually shake things up? Give me something new.
Okay, so we still have some bullish elements, and those bullish elements are mostly around the heat and dryness in some areas of the world. So we've mentioned over the past couple of weeks Australia, but we can also mention Canada. The prairies are getting hot and dry once again, but the main focus remains Europe. The heat wave is real. We've been talking of 38 to 42 degrees.
We've experienced it ourselves.
Exactly. And it is going to hit the capacity to produce corn, or maize, I should say, in Europe. So we're going to have to continue to watch this. Also, there's been some bullish elements coming out of Russia, with Sovecon, for example, saying that the harvest has started in grains, and the early indications of yields are not as good as expected. Now, we need to be cautious. It's early grain estimates. They may improve as we go along, but the first readings are not so good as we may have anticipated initially.
Okay, what about Paris?
So the other element as well, we're getting closer to end of July, beginning of August, where we should have the roll taking place, as the funds are very short September, or very short Paris wheat in general. So we still expect a SEP-DEC roll to take place, and we're getting closer to that timing. So that could be supportive as well. Also, we had some development in some of bullish story. We've seen some analysts, and more specifically banking analysts, trying to make a call for the new crop. So when we look at a high euro, when we look at the cost of fertilizers going up because we've seen the Ukraine hitting some Russian plants, the EU wanting to limit Russian fertilizers coming to Europe. The argument being put forward is that farmers are going to struggle in terms of new planting. Are they going to plant less? Are they going to plant something else, for example, pulses? And if they plant, are they going to use less fertilizers? Therefore, are we going to get less production going forward as well?
Okay, and one last challenge for you. With the heat in Europe and winter barley and wheat mostly past that vulnerable stage, shouldn't this actually help harvest progress?
That's right as well. So yes, the heat will help the harvest progress in barley and wheat. And interestingly, we started to see the French winter wheat harvest starting, and we've had some feedback that was interesting. It's been really hot, so therefore the early cuts are telling us that the moisture levels are low. We're talking 11.5 to 12.5%, more or less. The specific weights are really high from what we've heard, some 80 to 83 kilograms per hectoliters. That's a really high figure. And when you have, therefore, potential high yields, the protein level should be impacted, and so far we've heard 10.5 to 11.2%. So the bears are, in a way, quite happy about those protein levels. They're saying, well, if it's a big crop, low protein, it's going to make it even more difficult for France to export, therefore it's bearish once again. But the cooperatives have reassured us by saying these are very much early cuts. They're not representative of the entire harvest, which is barely starting, and they expect to see better protein levels in the next cuts and in the harvest progress, and therefore we should see lower specific weights, higher protein for what comes next.
Okay, well, that's a lot of things to keep our eyes on. Thank you, Bertrand, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.